Hey everybody, welcome to the show. Welcome to the show. Welcome to the show. Looks like we got Mark and Chris from Greece driving. From Greece to driving from Arizona to Arizona from Iowa. Whew, you world traveler this week, Chris. Last week, I guess, last 7 days. Dawn, good morning, Fred. On the cardboard front, I wonder. You say correlation. You should have said, I wonder what the corrugation is to imports. But it's we're going to talk about cardboard companies in the U.S. that supply to U.S. companies. So it's not just international type stuff that we're talking about. We're talking about companies like Smurfit Westrock. Give me a second here. Popping it up. Trying to read the chat. Todd, thanks for being a channel member. Today at 5 p.m., we have 30 minutes of awesome coming up. It's the only time of the week I do requests. And for the first hour, we'll have everybody, all channel subscribers. Well, you don't even have to be a subscriber, I guess, to watch it. But then after the first hour, we'll go to a Ask Me Anything format for channel members only. And keep going like that. So seems to be a popular perk for channel members. So we'll do more of that. And that comes up at 5 p.m. Eastern time today. Set your reminder in your phone. Come hang out. Click the bell. Make sure you set it to all notifications if you want to get notified when I go live. And General Rush, good to see you. Sir, Skaggs, Mad, Rob, Diane, Dan, Serge, Gary, Mad, Craig, Sledge, driving, be careful. Yeah, Goose is on the loose. Yeah. Goose is driving through, heading south for the winter, I guess. Wrongemer, Will, David, Ed, Jason. Good to see everybody. Let's talk some cardboard, shall we? And maybe about trucking problems also. Got the Blue Monster today. So, good morning, my savvy investors, the people that, maybe we get lucky here and there. The other day, I found myself in a bit of predicament. I was trying to navigate my own living room, which has started to resemble a cardboard box graveyard. You know the scene. A mountain of Amazon boxes, each one a monument to questionable purchases over the past several weeks. I swear, my delivery guy probably looks at my porch with a mixture of pity and contempt. But as I was wading through this sea of corrugated sadness, a thought struck me. What if these boxes, these humble, brown, unassuming containers, were trying to tell us something? What if they're the canaries in the economic coal mine? Well, it turns out they pretty much are. And right now, those canaries, well, looking a little bit unwell. You see, cardboard sales is down. It's kind of like plummeting. If you look at the numbers, we actually are at the lowest cardboard shipment volumes in over a decade, since 2015. Where'd all that growth? Where's all that economic growth, right? That's right. The things that hold literally everything we buy from just about anywhere are suddenly at their lowest shipment volume since 2015. It's almost as if people are buying less stuff. I know! What a shocking concept in the ever-rising inflationary environment we're in. Our consumer paradise is taking a step back. Now the so-called experts are scratching their heads. On one hand, you got Deloitte Little wringing their hands, predicting the slowest holiday season since the pandemic. On the other hand, you have Visa and Gallup waving their pom-poms, telling us that consumers are ready to spend like drunken sailors on shore leave. It's a classic case. He said, she said, with billions of dollars on the line. Who's going to be right in this story? So who do you believe? The people who make the boxes or the people who want to fill them? I want you to fill them, I guess. Here's where the story gets a little bit more interesting. See, while everybody is busy staring at the cardboard box tea leaves, a much bigger, much more disruptive storm is actually brewing out there. And it's on the highways. I'm talking about the Great Trucker Purge of 2025. You see, thanks to some new regulations, we're about to see a mass exodus of truck drivers. We're talking about 600,000 truck drivers being kicked to the curb. That's nearly 20% of the entire workforce. Poof, gone, vanished. Now you might be thinking, so what? As long as I get my Amazon packages by a drone, no big deal. Well, not so fast, Jeff Bezos. You see, those drones need to get stuff from a warehouse. Those warehouses need to get supplied by trucks. With 600,000 fewer drivers on the road, getting anything from point A to point B is about to get a whole lot more expensive, potentially. We're talking about COVID-level supply chain chaos. Remember when you couldn't find toilet paper for the love of your money? Well, we could have that, but with everything that needs to get transported. And this time, there's no cavalry going to come to the rescue. The government has shut the door on the endless supply of migrant drivers, and that kept the wheels turning in this last crisis. So what does this mean for savvy investors? Well, it means opportunity, of course. While the rest of the world is panicking about the coming truck apocalypse, you can be quietly placing your bets, thinking about it. Who wins when there's massive shortages of something? The people that control the supply, of course. In this case, it means the established trucking companies, the ones with the resources to weather the storm and scoop up the business from all the smaller players that are going to go belly up, more than likely. You look at companies like JB Hunt, that would be Juliet, Bravo, Hotel, Tango on the ticker, and Night Swift, that's Kilo, November X-Ray. Those are looking more attractive right now. They're the ones who might be able to name their price when everybody else is scrambling for a ride. And what about those sad, lonely cardboard box companies? Well, you're a contrarian. You might see a buying opportunity here. If you believe the consumer spending forecasts, then companies like Smurfit Westrock, that would be Sierra Whiskey, and International Paper, that's India Papa. Well, those might look pretty oversold right now. But if you think the economy is heading off a cliff, maybe you want to wait for the bottom. So, don't shoot the messenger, right? Look, I'm not here to tell you what to do. I'm just here to tell you a story about cardboard boxes, truck drivers, and the funny things going on that mainstream media maybe not talking about. It's a story that if you play your cards right, potentially make you a whole lot of money. So the next time you're drowning in a sea of your own online shopping shame, take a moment to thank the humble cardboard box. It might be trying to tell you something when we look at the supplies. All right. That's what I found today. Welcome, everybody, to the show. So all trading involves a substantial risk of loss. If you invest in any of the companies we talked about, JB Hunt, Night Swift, Smurfit Westrock, International Paper, or others, you might lose money. Sometimes I get lucky. I point out the stories. There's cracks in the system. And just trying to put it all together here. How's it going to unfold? This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade any of those things, you can buy and sell them. You might lose money. Be careful. Nobody's going to watch out for your money more than you. But if you want to hire somebody to help you know what to do. I got a message yesterday. Like, I hired a financial advisor that has a great track record. I really trusted him. And every trade I did lost money. I swear. I promise, Scouts Honor. I got that message yesterday. I was like, I'm sorry. I was like, it's you got to take a personal interest in your own well-being financially. Hey, Kimberly, my favorite subscriber here. So it's it's interesting. It's so we're talking about billions of cubic feet of cardboard. We're not talking about some like we're talking about stepping back below 20, like take a step back below 2015 levels. So let me see if I can find there's a cool graph that goes with this that I didn't show because I don't have a great way to read the monologue and show graphs. Funny enough. Let's see if I can find. That's probably me pull this over. And how many of those do I have? It's another one, and 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 oh, closed call sheet. Poly market. Didn't mean to close call sheet. Let's see. Let me see if I can find the cardboard box sales thing. I guess it's not that cool to graph, but it is. It's telling. There you go. We peaked. Now we're down here. This is not just a little like oopsie. This shows that we're kind of in this like spending recession. Somebody been talking about this for a while. How starting in 2022, with the 2 consecutive quarters of negative GDP, we entered a recession. Now, be like, everything is great. The stock market's going higher. That's not a recession. Well, we're seeing more and more problems for more and more people in the low end. And this is kind of indicative that we see more problems. This is billions of square feet of cardboard. Billions. So everything gets shipped in cardboard. Except for a few little things. Yes, I know. Few things are in envelopes, few things are in this, few things are in that. But this is not just like Amazon quit using cardboard boxes for everything. This is much bigger than that. And that that level right there, you roll it all the way back over here to the 2015 level right there. So we're back below this. You see this dip right here, right? That was relatively fast. Took a while to recover back out of that. Seems to me we're in another potential downside here, maybe bigger. So, just something to watch. I'm not saying it's there's just problems. I mean, that's the bottom line is there's problems. And I don't know. If we didn't have government spending in the GDP, which, government spending is all weird right now anyway. If we didn't have government spending in the GDP, it would still be grossly negative. Like hugely negative. I think after tomorrow, we are setting a record for the longest government shutdown ever. If I got my numbers right, we're in like day 35 now. Expected to go 44 days at least. We're down to betting on each day, I guess. It's kind of interesting. I know they had a 50-day thing on here the other day. There we go. Got it all the way up to more than... Be interesting. How many days does it go? A lot of people thinking we resolve it before 50 days. Seem about a 30% chance it goes longer, 70% chance it doesn't, according to this. Right now, the average 44 days. We're sitting at 35, so another nine and a half days or so on the forecast. It keeps pushing higher though. And let's see, where did... So we didn't think we'd have like the market didn't think we'd have any shutdown really, or if we did, we'd have just a couple days. Look at that sucker climb. Guess we'll see what happens. Here we are on Tuesday. Not a lot. Yeah, we're not getting a lot of economic news here. We're getting some third-party numbers. University of Michigan and stuff like that still putting out their numbers. But we're not getting these. BLS probably ain't going to put out these non-farm employment numbers while they're shut down. They didn't put them out last month. They're not going to put them out this month. So we'll be on month number 2 without any data there. It's an interesting situation from my point of view. And let's see. How do we make money today, though, right? How do we take this, make money today? Let's talk about earnings this week. Pop that up really quickly. We had Hims reporting earnings yesterday. That's nice. I don't remember what I was doing on that. Let's close that back up. Pop over here. What the heck is... must have been when I was talking with Jack on that. Hims reported earnings. They were up in the pre-market, but now just flat. As we have a down day coming into the market. Even good earnings can't fight the potential. Oh, look at that. We broke below the low. See that level I was talking about yesterday? Let's take a look. That was a warning. Thursday. I guess Friday. Thursday, Friday. I don't know which day was that. Friday. Yeah, Thursday we got the drop. Friday we got the recovery. Held the 618. Get my days right. Friday we held. Yesterday I was like, if we break below this level, probably coming on down. And that's exactly what happened overnight. Why in the devil did you recolor? What the fork? Stop changing my color settings. There. Maybe it'll save. So first move down. This looked kind of like, and actually this was probably the first move down. This all looked like B-wave action. Now we're 1, 2, 3, 4, and we probably got a 5th wave to go to wrap this up. But we're in the vicinity where we can bottom anytime now. So one more little whoop can wrap this up. Now, it's possible that was the 4. Not very likely, but it's possible. It's possible this was a 1, 2, 1, 2, 3, 4, 3, 4, 4. And we get a little extra extra juice on the downside. But if you remember, we've been talking about the fact that we would come up here, probably retrace. We went a little higher. Now we're retracing. Then we'll probably do that. Anybody surprised? Anybody here that follows me regularly that's shocked that we're doing a pullback in the beginning of November, pretty much just like I said? We went a little higher, but now we're pulling back. Is anybody shocked? I mean, maybe you're shocked that I got right, but I shocked myself on it that I'm right, but we were back here middle of October when I drew that, and that. So, yeah, it's probably going to be, it might recover the second half, but right now it looks looking like we may come right back down here before we go up here. So, Bitcoin, we're getting ready for that $100,000 test. We are below the low. Here she comes. 100K. Are you ready for it? Been warning. We were going lower. How long did I warn this? I mean, when we stopped right here, that's when I really started ramping up the rhetoric that we were probably going to go down. Now here we are. Is it going to stop here and reverse? We're going to come on down to 100K. If we don't hold 100K, this is going to get ugly. Very quickly, we can be right down here. Lose another 10K. That's 13K down to the ideal support. 13K evaporated off the price. I love all the rhetoric, all the narrative, I have so many people telling me this time is different. Everything is different. I don't think we have crypto seasons anymore. Now that we have ETFs and now that we have treasuries, I think this time's different. Why? What makes you think this is different? Where's the price action? Sure, we don't have 30 crypto seasons to show us the statistical population. We've only got 4 cycles. Why would you think this cycle is different? Until something shows it's actually different. This is an important point here. I want to show you something here. On the Bitcoin chart, right here, I drew this red line for my crypto power plays. That's what this crypto power plays. I drew this right here 2 years ago, maybe longer, maybe 3 years ago. I drew that October 8th red line where my guess was going to be where we made the top. We topped 2 days before that. Now, there's a downtrend of highs right here. We tested it right there. We went to a higher high. We failed to break on out. That was a 3-wave up. And now we're back at it. There is potential that this is just one big correction. This just got a little overhyped because Bitcoin's excitement. This was an A, this was a B, and this is going to be a C. There's potential that we're just making a correction. Now, this $100,000 test, it's an important level. If we get below that, we may push it down here. It's 90, 89 to 94,000 area that I've talked about. And that all comes from this low, this high, this 618 retrace right here, this move up, this 618 retrace. Come test that. We haven't really done any giant pullbacks. And this one was slow and calculated back here. But really, we've just been kind of grinding up. We haven't done any fast, nice size pullbacks. Haven't flushed out the weekends in a big way. See, look at this. This was violent over here. Violent pullbacks. You don't see any of that right now. So that's the maturity in the market is that we don't have violent pullbacks. They're getting bought. But we still have to do the pullbacks. It's just healthy price action. So we're going to come down, probably test 100,000. If we get below that, this is the ideal support zone right in here. If we can hold that, build something that looks like impulsive price action off of that retest, then we'll probably go on to maybe the 150K target. And what that looks like right here, if we can make this work, if we can hold this, if, lots of ifs. That's not the way I like to trade. I don't like to trade with a bunch of ifs. But if this works, these prices still are intact up here. 150, 170. That would be topping right here, retracing, holding right here. We can still go up here. Still intact, still working. That'd be a 1, that'd be a 2, potential 3, potential pullback for a 4, and then potential 5. Then we'd be off of the 4-year cycle. Because this is going to take well into next year to probably work this whole thing. If there's a 3, it may go really fast. And then 4 takes a few months. And 5 all 5 has to do is get higher than that 3. So it's not all lost yet. But we are going to go through. It's looking very likely we're going to go through a bigger correction here. Especially as we're starting to push into that downtrend line right there. 100K, next stop. I'm going to put the alert right at. We'll see what happens. But everybody should be careful right there if you're long. If you're long particularly. This is looking like we're going to come down. So that's what we got cooking. Hey, Goose. Careful driving down the highway chatting on YouTube. Hope you're at a truck stop. Pulled over for a minute. Ethereum. Well, this one also not looking too great. 2,500. That's 1,000 points down. That's where we have the support. Right down there. So, NKD. Seeing, oh man, look at that. How close that got to that 53. Get a pullback here too. So this is kind of a global pause. You're gonna sell everything, figure it out tomorrow. Seems to be what we got going on. Dollar breaking through. Next resistance at 100, 101. Then probably set up for that move to 102. If we, we may see a retrace, retest the roadmap line here. May see it come back. If we do that, hold, turn back higher, break back above whatever high we make, whether it's here or here or here. If we retest, shoot back, break out, we're probably going up substantially. 102 can kick off a short squeeze. That puts downward pressure on the U.S. market. It's not correlated. It's not like a correlation, but it does. Higher prices in the dollar index put negative pressure on U.S. stocks. Correlated when they're correlated, not when they're not. It's not something you trade. Oh, yeah, look at that. Right down to the 618. Oh, yeah. For anybody that was listening to me talk about 60 being the support on Nike, we are in the ballpark. Now, if we break on down below 50, let's say 57, 56, I'm going to say 56. If it goes below 56, this is probably going lower low. What we need to see, just like on Bitcoin, we need to see this hold, turn higher with some enthusiasm, break through this roadmap line that's going to be coming on down, and set it up for getting out of here. This could be the big bounce. Like this, ran out of juice, retracing. That's probably the A right there. That's probably the B right there. This is the C right here. I've been watching this one for a while. We're in the proportion where this is probably going to bottom out if it's going to hold. If it doesn't hold in here, probably going lower low. That's just something to keep an eye on. Still expect this to make another bottom here. Sportswear stuff. Boing, boing. Here's the first support. Here's the next support. Here's the next support. Looking for this to ideally come down here and back around 160, because that sets up the biggest upside if we do that. It can be, if it can do bullish things. Roll back up, look at gold. And gold looks like we're going to take the next leg down. Watch out. Watch out below. Oil, we break below the low the last few days. Probably coming back to retest that low. And if it doesn't hold this time, maybe we can get the final flush out. Should be fast when we do it. Should be a very capitulating flush out, similar to what we had back here. These big down candles. I want to see one more of those take us right down in this low 50 area. Russell still sitting right here. We pop that 2600, maybe 2700. That'll be a sign of the top, but we're not doing it yet, so there's still potential to go on higher. RSP didn't tag the top either, but it looks like we're coming back down for the roadmap line test on RSP before we can go on up. This is kind of when I was talking about this all last week. Let's take this off log mode for a minute. I was talking about how we hit the top several times here on stocks above their 20-day moving average. And we're probably going to have to push the bottom before we take it back to the top again. Same on the 50-day. We hit the top, and we've been grinding this. We need a little flush out. Put some down pressure here. Recharge the market so we can go higher again. But stocks on their 200-day, We still haven't hit the top. So another reason why I don't necessarily think we've topped out in the market yet. Kind of need this to, it doesn't have to hit the top, but it's likely we go hit the top before we make the major market top. And it's probably not the high there. When this tops out, that really sucks everybody in. So then we look at the NASDAQ stocks above the 20-day. It's got close to the bottom, but it still has downside pressure. NASDAQ stocks above the 50-day still has the potential for downside pressure. And NASDAQ stocks above their 200-day still hasn't maxed out yet. Still haven't maxed out the credit card. Russell, a lot of volatility here. This potentially could be a bottom. So this one doesn't respect the 80-20 as much. That could be the bottom. So we could be set for the rip on small caps. And this 50-day looks like it needs a bit more downside. So 20-day we push down, pull the 50-day down. And then the 200-day, well, we haven't hit the top in a long time. It just shows the weakness in this one. So this one's less about the 80-20s. It's been really beat down here for a long time, a lot of years. Move hasn't been showing any kind of, we are not have any bond volatility at all here. Keeps pushing lower. So that's what we got cooking right now. And then this one, go up to a bigger time frame. I have to switch to a line chart. Look at this, price to sales just keeps going higher. Price to sales ratio for the S&P. We're getting near the top out potential here. Thought we might get up in here before we take a big dive here. You see, this is 2021. That's 2020. .com bubble, great financial crisis bubble. This was like the coming out of COVID pop. Retrace in 2022. Now we're up here at ridiculous levels. The correction here is probably going to be pretty violent. This is the average price to sales ratio across all S&P 500. 3.5 is, that means 3.5 years of all the sales to cover the current value of the S&P 500. 3.5 years. Usually, as long as I've been trading, the majority, somewhere down here around 1.5 is usually where the market likes to be. But we've been ripping it higher recently. So be careful. Be careful. Palantir is not big enough to skew these numbers. I mean, they're just one company. These are all just one company, each one. Throw your numbers in there. And Palantir's numbers, actually, with the growth in their income, changed up the game a little bit. It's still ridiculous, but I don't know if they've updated these yet. After they reported earnings yesterday, yeah, they didn't update these yet. These numbers came way on down to like 90. And this one came down to like 300. But still pretty crazy. Not so cuckoo. So Palantir, looks like we flew a little close to the sun. Taking a step back. This can come on down very rapidly. Let's see, yeah, we're selling everything today. China coming back up pretty nicely. Everything's getting sold. We're down to my top strike. I have a 59.52 debit spread. Looking for something down here. If we get that pullback to 92 on Bitcoin, it'll probably take us down to 52 on IBIT. Be careful out there. Careful out there. Be careful out there. So I've been doing these daily credit spreads and stuff. Year to date, look, 31,000. So this is what I'm doing right here. Doing these trades. Sell one, get a credit. I sold 3 of these, 25,830. Did this at didn't even have the time right. I did this at 1:30 yesterday afternoon. 1:30 p.m. Eastern time. Sold these 25,830s. We'll go look at the chart in a second. Bought these right here. 25,780s. It's $50, 50 points difference. Times 100. $5,000 risk per contract. 3 contracts. It's 15,000 bucks of risk on the table for 2:30, 3:30, 4, 2.5 hours, 2.5 hours, right there. Now looking at the numbers, collected 609 here, cost me 452 here for the protection. Why not just sell it naked? Because this takes like $500,000 per contract to roll naked. I can't roll with that. So I come down here 50 points and buy protection. So 609 minus 452 is 157 bucks. Right there. Not bad. 2.5 hours. Hold time. 157 bucks. Now, what gets really crazy on this, it's 99 point, where I played yesterday was 99.7% likely to profit. I'm at the 3 standard deviations away from price. Grab the calculator. Everyone wants to know how you make money in the market. Like, this is, it doesn't seem like big money. 157, do this 250 days a year. There's roughly 250 trading days a year. It's $39,000. It takes me $15,000 risk to do it. That's 261%. Making 157 bucks. You know, basically making 50, was it 50, 52 bucks, 53 bucks a contract. Just hunting for 53 bucks. Not bad. A lot of people have trouble with this. Like they're like, I don't see how you make money. I'm only targeting like 40 bucks a contract. 40 bucks on a $5,000 risk. 0.008% times 250 days you could do it. It's 200% return. You get 40 bucks a day per $5,000. 40 bucks a day. Now, the days, statistically you should avoid FOMC days. I did 25 years of back testing over the weekend, FOMC days are the days you shouldn't do this. There's a few other days, like days that start out bigly negative. Should avoid those days. Don't do it on those days. Other than that, the average price change between 1:30 p.m. and 4 o'clock p.m., the average price change on NASDAQ is 0.45 points. For something that moves hundreds of points, the average move on NASDAQ, the average move between 1:30, clear this off, between 1:30, right here, 1:30 and 4 p.m., right there, average move is 0.45 points. And it's positive. Now, the standard deviation on that gets to be pretty big, because when you do 3 standard deviations on that, 300 points basically is 3 standard deviations for that time. While the average is flat, the 3 standard deviations is 300 points. So plus or minus 300, that covers 99.7% of the time. Now you do your math on that, 99.7. That leaves you 1 day a year. You might get in trouble. I'm talking, when I talk about big down days, I'm talking about this. Days like that, you should avoid it. So we got an outsized move in that last. And I did the statistics on this from 1:30. Pull this up, 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 up. 1:30 to 4, 339. That was bigger than 3 standard deviations. That's why that one. Anybody that followed me, I have one in the I have one in here that's a loss from back on the 10th. And it turns out, I spent a lot of time trying to figure out what the statistics on this were. Like, why did this one fail? And that should have been my tell not to do this freaking trade right here. Other big ones that failed. I'll have to roll back in here a ways. Here's another one that failed. $3.30, 4 o'clock, 780 points down. 1:30, 4 o'clock, 782 points. You know what day that was? FOMC day. So you avoid FOMC days and days that start out bigly negative. You put odds in your favor. Let me know in the chat if you find this fascinating. I did a lot of work on this over the weekend. A lot of work. I know it's different than my normal show that I do in the mornings here. Thought I'd show something interesting that I've been working on. This is the kind of stuff I share with my Termite Trading Lab group. Links in the description if you want to get more information about that. Let me find this spreadsheet I did. Let's see, it should be this one. Open. Yeah, here you go. So like, just to reaffirm that this was not just a couple little trades here, pull it back to, I did two different data sets, one back to 2020, last 5 years, where the NASDAQ price is relatively the same. And did a bunch of, like, how many times did we get more than a 300 point drop? 10 times in 5 years. How many times did we get bigger than a 350 point drop? 6 times. Bigger than a 400 point drop? 4 times. Bigger than a 450 point drop? 3 times. Bigger than a 500 point drop? 1 time. And that was that December FOMC meeting from last December. So you can look at the percentage drop. 14 times we got bigger than a 2.1% drop. 5 times we got bigger than a 3.1% drop. 2 times we got bigger than a 4.1% drop. 0 times we got bigger than a 5% drop. Now coming in here, looking at the 3 standard deviation level. That's 3.25% or 3.24%. 4 times we've gotten bigger than a 3 standard deviation drop in the last 5 years on a percent-wise basis. So once a year, we get a move bigger than 3 standard deviations on average. So I did a bunch of work on this. You can see there's thousands of trades in here. It's actually not this many. It's actually 1,750 or 1,725. Count this column. There's two transactions for everyone, or 1457, excuse me, 1457. Can't remember my numbers because I've got the 25-year also that I was doing. A bunch of stuff in here. And where'd it go? Right here. This one goes all the way back to 2005 right there. Now the big difference here is NASDAQ was way cheaper back in 2005. So these point drops are the same numbers. The percentage drop is totally different. So this one goes way on down here. We're at over 5,000 trades. So this is the kind of stuff I do on the weekend. So how does this look practically? You fly in here, grab the index, come in here with a 0-day. Handy dandy, Tasty Trade puts these deviation lines on here. Like 1 deviation, 100 points down. 2 standard deviations, 200 points down. 3 standard deviations, 300 points down. That's kind of cool. Now, right around 130, I'm trying to find the sweet spot for it. I did the numbers based on 130 at this time, over the weekend. I was doing numbers based on 2 o'clock also, which they didn't seem to matter much. There seems to be a premium suck out that happens between 1:30 and 2:30, but it doesn't always occur. So I went with 1:30, trying to find the premium. I usually roll down here somewhere around $2 and then jump down 50 strikes, buy that one. That's about the credit you usually get. Now, where exactly you should be, that's personal preference. You'd be like, well, there's not many people playing down here, but that's not true. Look how many hundreds of contracts. 240 today at 25,000. 158. You'd be like, well, people expect this to drop. I'm not so sure. Well, there's lots of speculation why people are playing down here. Maybe people are playing, I don't know. I could speculate all day. Maybe they're selling at the monies, but that doesn't look like the case. I think people are playing this game, selling this premium down here on 0 days. Why it exists, I have no idea. But you can come down here and do this. Look at that. Craziness. I'm really only trying to grab 40 bucks on a $5,000 risk. Do that every day. You can see that one right there. Close to 40 bucks. On average, if you can get 40 bucks a day, it's 200% a year on 5,000 bucks. That means and that's 200% return. That means your 5,000 bucks turns into 15,000 bucks over the course of a year just by doing this. Now, if on average we get one drop below 3 standard deviations, one drop on average per year, and you lost the whole 5,000, you'd still be doubling your money potentially, as long as you didn't use all of your capital and lose it all. You'd still be netting $5,000. Even if you took the loss, a full loss, still be coming out 100% gain per year, doubling your account potentially. But you can't put it all in the trade. You can't put it all in one trade, because if it does blow out, you're out of the game. So it's doubling instead of saying doubling your account, it's doubling your capital allocation. You put $5,000 into doing this, generate $10,000 a year. If you accidentally get caught with one of the 3 standard deviation losers, you're still at $5,000 profit for the year. Now, is it possible we get more than one 5 standard deviation or 3 standard deviation loser in a year? It's possible. So I should always be careful. Substantial risk of loss involved in all trading. What's the risk of loss? 5,000 bucks. These are cash settled. You just let them roll to expiration. Even if you're in the money, you can let it roll to expiration and it'll just settle out the cash. You don't have to do anything. There's no getting put. These are European style. There's no early exercise. But playing 0 days, there's no early exercise anyway. So, as always, be careful out there. You can lose money. I did take a loser. I lost 1,300 bucks on one contract back on the 10th, on that big drop on October 10th. So I started trying to figure this out. I've been doing I've got 30 of these successful, maybe more, in that one loser back here on the 10th. October 10th, not August 10th. Right there was one loser. Now, I did this almost every day since then, and I'm still about 100 bucks down. 100. Let's see. I have it right here. I can show you. Symbols. I wasn't doing it, funny enough, in this account, I started doing 197 bucks. I started doing it October 10th in this account. Still negative 197 bucks. So I've made it back to almost scratch right there. After today, maybe tomorrow, probably be positive on this. If I do it today. I don't do it every day. I don't remember to do it every day. I don't have time to do it every day. I do it almost every day, but not every day. So right now, that's not a big negative day so far. Jody, that's a green candle. It's not. Now, if we roll down and start doing this and come 130, we have this big red. Don't do it. Got to read the day. That's takes time to learn that a little bit. So thanks everybody. I'm gonna wrap it up. I'll be on Market Masters here at 11:30, about an hour from now. 30 minutes of awesome coming up at 5 p.m. and we'll see you later.